Hey everyone, welcome again to another episode here of the Mitten Mortgage Lending Podcast with myself and our owner Chris Sabonik. Jumping right into it, first thing we want to talk about is home equity and values of homes. This has never been higher across the country than it is right now. So we're going to chat real quick about what we can do with that equity and how we can make it benefit our financial situation.
Yeah, so I know we've talked about this before. We've talked about it a couple times probably, but it's one of those things that I don't really think will ever get old, especially just given the status of the economic status really in the U.S. right now. Mac already touched on it. Home equity is higher than ever, so people have more equity in their homes right now than they historically have ever had in history. There's more equity just sitting in homes, kind of doing nothing right now than there ever has been before. So that's awesome news. That's good news. A lot of people have a lot of equity in their home. However, on the other hand, and the flip side of that, what's also higher than ever is debt right now. So it's great we have all this equity in our home, but it's kind of locked away in our home in a spot where at least most people aren't using it, right? It's just kind of sitting there, which is good. They have equity in their home, but they're also paying 20, 30, sometimes even more percent on credit cards and things like that. So what we talk about, and I know you talk about this a lot with your borrowers too, but rather than, don't focus on anything else other than what overall monthly payments are you expending every month? Like what are you sending out? What's coming in is obviously very important too, but what are you sending out every single month? We challenge people to kind of just think about if your home equity could be put to better use, because if you're paying high interest and you're sitting on a ton of equity, there's a much better way to do it.
Yeah, there's definitely, there's situations where obviously, the equity of your home, it's like a stock and it's growing and growing. The way it's currently set right now, and maybe things are fine, you're making your payments on time, there's not a lot of debt for you. But on the other hand, if you are in a situation where you do have some credit card debt that has gotten more out of control than you would have liked, okay, or we're not paying that. We used to pay that credit card off at the end of every month, and now we've let it ride a little bit, and now we're starting to accrue a balance on that every single month, and it's carrying over. We want to make sure that we have that cleaned up. Maybe there's a project that you had done at your home where we're paying interest on that project, the financing that we took out for that. So yeah, looking at those overall monthly payments that you're paying. So your mortgage, what are you paying for that? What are you paying for your credit cards each month? What are you paying for your car payments? What are you paying for maybe that vinyl fencing you had put in the backyard? What are you paying for that? What are you paying for that pool you had put in the backyard 2-3 years ago? So looking at that and seeing how can I make this equity work for me to lower my monthly payments is really what we're really focusing on, and that clients should at least be looking at and having the conversation about.
And I think it's very important to look at where, look at what money's coming out, right? Look at what you're spending every month, but also look at where it's going. Because we'll have a lot of people, we'll look at this cash out refi, we'll look at using some of their equity, and don't get me wrong, it would be a fear of mine too, but the immediate fear is, well, I don't want my mortgage payment to go from, $1,500 to $2,000. Okay, well that'd be an extra $500 a month, and I understand. I can't think of anybody who wants their mortgage payment to go up $500 a month. However, if we look at what we're maybe paying off and where that extra $500 now is going. For example, I had a client who had credit cards. They were making minimum payments on their credit cards, so the balance was going nowhere on these credit cards, and the balance was actually going up. Yeah, they were accruing more balance. They were going backwards on these credit cards, simply just paying interest every month, just going nowhere. And we were able to cut down their total monthly outlay. They had 3 credit cards, I think, that they were making minimum payments of about $300 a month on, and they were going nowhere. So there was $900 going into thin air every month for them.
So they're paying $15 for the house, $9 for the credit cards. Now we're at $24, and if we just take the mortgage payment to $2,000,
and with them, exactly, we took their mortgage payment to $2,000, and not only did it cover everything, but now the balance on that mortgage is going down every month. They're finally paying it off. So let's not focus on what our mortgage payment is. It's very important. We need to make sure that we're comfortable with it and we can make it. But let's focus on, hey, what are all my bills right now, and how much am I paying for all of those? And if I combined some of these poor interest rates or just maybe bad loans that aren't going anywhere into my mortgage, now what is my total monthly outlay with my mortgage payment? And I think we've helped a tremendous amount of people with it already. But as this equity situation continues, I know debt's going to continue to grow. So if you're even thinking about it, or if you've even thought about a cash out in the past, and maybe it didn't make sense or it didn't work out, it's certainly worth exploring, especially with home equity being at all-time highs.
Yeah, we're getting to that point too. That's right around the corner. Holidays are right around the corner, where there is a lot of spending that goes on. Winter's around the corner. A lot of people head south or take a vacation during that time. So it's a chance to kind of rebalance your budget, get your budget under control, but also maybe have the ability to have some extra funds available so you can do those things. So Christmas isn't a burden. You have money set aside for that vacation that we can plan for. There is. We had that one. I think it was Sean's, where with the lady we had to plan for the lady going to Japan. She's just taking that trip to Japan, so we had to factor that in to a refinance. So there is stuff and real life situations that come up during those things. So we're trying to help them navigate that, and like I said, get themselves under a budget and get in a better financial situation heading into the new year, heading into winter. And the benefits too, like when you refinance, good chance you can skip 2 payments. You can get an escrow or escrow refund check back. So it is a way to kind of give your current financial situation a little bit of a boost and inject some cash into it.
It can almost be a little financial reset for you, especially if we do it right. And we're not just going to do a refi, and this goes back to things we talked about before. If it doesn't make sense, it doesn't make sense. We're not going to push you into it. We're not going to tell you to do it. We're going to tell you when we think it might make sense. We're going to keep an eye on it for you. But if we do it right and we look at your whole financial situation, like Max said, between escrow refunds, skipping payments, everything that's going on in a refi, we can sometimes get you a little bit of incidental cash back without doing a cash out mortgage. So there's some different ways, there's some different tricks, there's some different things that we can put in there, and it really, for a lot of people, can serve as a complete financial reset. Skip a couple mortgage payments, get a little bit of money back that you might need, and start paying your debt down and kind of reset your finances really.
Yeah, and so that leads right into our program of the month that we wanted to highlight here. It's relatively new, just out last week. It is exclusive to brokers, to us basically, at Mitten Mortgage Lending through United Wholesale Mortgage, and that is the Refi 90 program. So cash out refinances have always been limited, conventional, to 80% of the equity of the home. So real simple numbers, if your home is worth $100,000, your cash out refinance, that loan can only be $80,000. Now with this cash out 90, it could be $90,000 out of that, or 90% of it. So if your home's worth $300,000, that means your loan amount could go up to $270,000. So that, and that used to be $240,000 with that. So it opens up. There's also some other perks with it. There's no PMI with this. A lot of people don't want to go over 80% because it adds back into the PMI factor that they work so hard to stop paying.
To not have.
Well, there is no PMI with this, even if we are above this 80% threshold that normally requires PMI. The Refi 90 program, cash out does not require that PMI to be there, so that's a big factor as well.
Yeah, and this thing, we can go all the way down to 680 FICO on this. So there's a lot of flexibility here, like Max said. Going up to 90 on a cash out is a huge deal. I can't tell you how many people I've talked to in the last year that wanted a little bit of cash out, but we were sitting right at 80, or
just wasn't enough equity,
or maybe going up to maybe they needed 20 grand cash out, but if we went up to 80, they could only get 8 or 7 or whatever the case is. So this program is an absolute game changer. If you've even been considering taking cash out, this is an absolute game changer because you don't have to necessarily have the standard equity that you need to have for a cash out. So if you're someone who was thinking about taking cash out, and maybe you called around, you called your bank, you stopped at your credit union when you were out running errands, and every single one of them told you the same thing, hey, sorry, you don't have enough equity, you might now with this program.
And not only that, you might have been in the process, because if you got in the process with these cash outs, they do require an appraisal to be done. You may have been in the process of getting this done, whether it was with us or somebody else, and the appraisal came in low, too low where you couldn't get the cash out that you wanted. Well, if the appraisal comes in low, you can only take 80% of that number. Again, now that's 90. That's why this makes a difference. So if you planned on, or again, you were in the process with it, whether it was with us or somebody else, and you were trying to get the cash out that you needed earlier this summer, earlier this year, and it didn't work out because of that low appraisal, this could be something that changes that for you, that now makes those funds and that equity in your home available to you now.
Yep. And like you said, there's some added bonuses to it too. You don't have to jump back into the PMI like you already said. The 680 FICO is nice. I know a lot of cash outs have a lot of restrictions on credit. We can get below 700 credit with this. So tons of benefits. All the same benefits as refinancing that we've always talked about. You know, we can set it up. You're going to skip it. You're always going to skip at least a payment, maybe two, depending on how things go. Escrow refund if it's there. So all the regular refi benefits apply to this, but it's just the freedom to jump up to 90% now is, I mean, pretty massive for a lot of people.
Yeah, the biggest thing we're trying to accomplish here is to have access to that equity. This allows us to have access to more of that equity that we have in our homes that we're trying to get out.
Yep.
So yeah, I know that if you talked to any clients about this recently, if any popped out to you, I know I had a couple of mine that did.
I had a couple that I called back. We're with this being so fresh, we haven't personally originated any yet, but I do have a handful of clients who, yeah, I mean, immediate. Hey, remember when I told you we couldn't cash out like 6 months ago? And they're like, yeah, I know, we're still waiting. And hey, guess what?
Yeah.
We can now. So we're setting it up. Yeah, I mean, I've had a lot of interest in it already.
Yeah, I know I had a client that was looking at refinancing, just a regular refinance that did have a HELOC. And we were really working around getting that subordinated from the other bank, so they would remain to be second in line or whatever. And now that this has come out, it's kind of been the change where it's like, hey, let's not do the regular refinance. If we do this cash out, we can totally get rid of that home equity line of credit that they have going on, which now that's what we're starting to dive into. So again, opens up options that really weren't there 2 weeks ago, was not there.
Yeah, opens up options, and without going too far down the line, we've talked about this before, when you do a cash out refi and when you do a rate and term refi, there's slightly different pricing available with each one. If people jump on this and do this refi 90 and they take their cash out right now, when we do finally see rates start to trickle down, hopefully soon, but more than likely not sometime next year in 2025.
Yeah. We're gonna get to that next.
When we do see those coming down, though, they'll be able to refi right out of this cash out, get into a rate and term, and now your debt's already been consolidated, everything's already together. Now we can get you back into a regular mortgage, down the road next year with the rock bottom pricing without any cash out adjustments.
Yeah, and that's one thing we try to explain to get across to clients. And like I always tell them, like basically, if you have an umbrella and you got these loans, you want to get them under one roof or one umbrella, because then once rates do go down and you refinance, you're going to get that rate and term pricing, which is the best pricing out there that you can get.
Yep.
Because if you take cash out, the rate does get bumped up on you a little bit. So, but to consolidate debt, HELOCs, credit cards, whatever, it's always going to be considered that cash out. So once we put that stuff together, if we're able to then, after that, the next time the rates drop, we're going to refinance, and basically you're back at square one with your regular mortgage that you would have been.
And you paid off all your debt.
Yeah. Now the debt's already paid
now
off.
You're debt free, and you get this. Well, you're not debt free; you still have a mortgage, but you're other debt free, and now you're just paying off your mortgage. And when the next time comes around, you're going to get the best mortgage rate you can because, like you said, everything is already underneath that umbrella.
Yeah, that home equity line you took to redo the bathroom, redo the kitchen. Well, guess what? All the work in the house is now done, and we got this back under one mortgage. No HELOC, no extra weird payments, whatever it might be. No interest-only payments; those are all gone. And we're moving forward from there. So, moving on, we just did mention to the market a little bit. So, market update. We were waiting again. A lot of people were. We had a lot of clients. We went through refinances. Refinance opportunities are really, really available for a lot of people during August, early September. We did. I know I did. I know you mentioned that you did. Had a couple clients. I want to wait to see what the Fed says. Fed's coming out with this big announcement, so we put those refinances on hold. And since the Fed's announcements, rates have went straight back up.
Rates have pretty much done nothing but climb since the Fed's announcement, which I don't think we expected them to plummet after the Fed's announcement at all. No. We knew that was going to be priced in. I really don't think anyone expected them to jump back up a little bit like they have either. Yeah. Now, I guess we should be careful here. We don't want to scare anyone. It's not like rates are through the roof and they're unbearable. They're better than they were, at the very beginning of this year and maybe even at the end of last year.
Yeah, they're better than they were in the spring.
But that little dip that we caught, end of the summer, kind of very beginning of fall, the dip has really since disappeared.
It just went back to where it was at.
It just went back to where they were. So that doesn't mean that no one should be refinancing right now. There are plenty of refis out there, people that maybe bought end of the year in 23, early 24, people who maybe put a very small down payment, so they got a slight adjustment to their rate. Like there's a lot of scenarios of people who absolutely can still refi right now and would benefit from a refi right now. But that dip, like you said, when things were hot and we were reaching out, hey, we've got a little slot for you. That dip is kind of gone. I know I have a couple people, a couple clients that the refi that we spoke about a couple weeks ago is really not there right now, unless they want to pay a ton of money for it. But probably not going to let them. They can do whatever they want, but we're not going to encourage them to pay a lot of money for it.
No, like you said, we're not going to make you do something.
It's going to come back down. Eventually, one day.
Yeah.
So.
Yeah, and I know you mentioned this before when we were talking about rates, potentially going down earlier in the summer. And your theory's always been kind of like they're going to test the new lows. They're going to test new lows. Well, they tested that low, and now
it bounced back up.
And now we'll sit here and we'll wait for that to.
We'll test another low.
Test it to go back down.
We've got election right around the corner here. We got elections coming up. I mean, I'm not expecting the needle to move a whole lot until at least after the election, and probably moving into next year. But we'll see how things go. I do fully anticipate 2025 though, some sort of rate drop, and I think for those of you who are kind of sitting on the fence with the whole purchase thing, I think 2025 will probably be crazy with purchases because, in my opinion, if these rates do slide a little bit, everyone that's been sitting on a 3% that they got during COVID, if we can get back into the fives, I think people will be willing to trade out those fives for threes. So I think there will be a lot of homes for sale. I think it will be a both for buyers and sellers. I think it'll be crazy. I think it'll be a crazy market next year.
And that we talk about the market a lot with interest rates, but with the interest rates going back up, and also just the time of year we're in right now. And I was just talking to an agent about this today. They're less competitive right now.
I had this conversation this morning.
If you are a first-time home buyer right now, and you're not tied to where you don't have to sell your home, now is the time where you can get into a house where it is not super, super competitive. I had an offer accepted last week, an FHA offer. The house was on the market for 5 days. FHA, $10,000 under asking with $10K in concessions. I mean, if you ask that, and the house on the market for 5 days, not 50.
I said 5 days.
So if you tried to present that offer in June, literally would have been laughed out of it, like not even a discussion. Your agent probably would have said, we're not even going to submit this because there's no chance.
Yeah.
Right now, it's getting really less competitive out there, where if you are on the sidelines, especially like I said, as a first-time home buyer or someone that's renting, someone that doesn't have to sell before they buy, man, now would be the time to get in there with the least amount of cash possible, the least amount of competition out there. You're not competing against 10 other offers right now. You might be competing against 1 or 0.
Some people simply shut it down right now. I know buyers that are well qualified, they're good to go, but they shut it down because they say they don't want to move during the holidays and they don't want to move during the winter.
So you get the best deals.
Exactly. So, yeah, you should be looking to buy, in my opinion, when other people aren't looking to buy. Mm-hmm. So, and don't get me wrong, there's still a lot of people out there looking to buy. But like Max said and like we talked about, like right now, if you've been hanging out, waiting around, before things, in my opinion, get crazy next year, I think now, like Max said, is an awesome time.
Yeah, and you get in now, and it's like, okay, well, you guys just said that rates are higher, so why would I want to buy now? Because if you buy now, and then when those rates do dip down, like we talked about, 6 months down the road, we'll be ready to refinance. So if you purchase a home now, next April, May, June, when hopefully these things go down, then you take advantage of a refinance. And the refinance, people always, the free refinance, like, refinance, we can roll costs in. It doesn't cost anything out of pocket, $0. You can get money back.
Very rarely does anyone that refinances with Mitten Mortgage Lending bring money out of pocket. Now, some want to, or sometimes we need to, I guess, depending on what the situation is. But like you said, it's
total personal preference.
It's extremely uncommon for someone to bring cash to closing during a refi.
Yeah.
During a purchase, you got to show up with your money. We can't roll costs in on a purchase. That's just the way it works. But on a refi, I would say, like Max said, 99% of the time, we can roll all those costs right into your refi. So now you're saving money every month, and you skip a payment or two, and you potentially get an escrow refund, and you really came out of pocket nothing.
Yeah, and it's less competitive now. So if you do have limited cash, if you're someone that you need to buy, and when you buy, you have to get concessions, this is the time when those things will be available.
Yeah,
they won't be available next summer.
Absolutely.
So now you can get some
they
deals
won't.
possibly with some concessions in there. Now you can get some deals, you can get offers accepted without maybe an appraisal guarantee from now until basically springtime, hopefully.
Yep.
So it's not just the time, if you're, like we said, fit that mold of a first-time home buyer or someone that doesn't need to sell, now's the time that I would want to be active. There's not a lot of homes out there right now.
No.
So again, you want to be active, you want to be prepared. We talk about being prepared. Get your pre-approval set, get your ducks in a row, have all that stuff ready to go. But that saying of marry the or date the rate and marry the house, 1,000% true.
Right
In
now,
this
it's
regard.
very true right now.
So going then now to our loan of the month, a topic that we have hit on before in the past, but needs to be reminded because I feel like when clients hear about it, they always say, "I can't believe that's a thing. That's amazing. It's totally useful," and that's gift of equity. So
Yeah.
go ahead with it because this one's yours, right?
Yeah,
Gift of equity.
this one's me. Gift of equity. Again, like Max said, we've talked about this before, but it's almost too good not to talk about a couple more times. I mean, if you are buying or selling a home family to family, I can think of no reason not to take
Any
advantage
family.
of a gift of equity. Any family.
Yeah, cousin, uncle.
Cousin, niece, nephew, doesn't matter. Family sale. You can gift the equity in the home. So this situation, we've got a family member selling a home. This is a gentleman's niece. She is selling the home. She inherited the home. She wants a lump sum of money out of the home. So we'll just give some generic examples. She wants $50,000. She wants to walk away with $50,000 from the sale of this home that she inherited. They owe about $13,000 on the home, so she needs $50,000. They owe about $13,000, and her seller's closing costs, we're very conservatively estimating at about $2,000. We don't think it's going to be that high, but we try to rather be safe than sorry here. So between all of those things, she's at about $65,000 that she needs to sell the home for $65,000 to pay her costs, pay off the loan that's still on the home, and then walk away with the $50,000 that she wants. Well, this home's been in the family for forever, so I know it's very important. This family wants to keep the home in the family, but this family member wants to move on. They don't want it anymore. Well, this person's uncle would love the home. He wants to live in the home. He's actually works out perfect. He's been shopping for a home, so he needs a spot so he can get in. However, he came to us basically kind of worried that he would not be able to make the purchase because he really doesn't have any money. He said he lives paycheck to paycheck. He has no savings. He doesn't have a retirement. He has nowhere that he could pull the money from and nowhere to get it from. So they were kind of upset because the niece isn't wanting anything crazy out of the home. The home is probably worth $90,000 to $100,000. So the home's worth plenty. She doesn't want all of that out of there. So I explained to them, hey, if you are short, Mr. Borrower, if you're short, you need about $10,000 to bring to closing on this. By the time you pay for your down payment, you pay your insurance, you pay your taxes, you're going to pay title work, all these things that go into a closing. We said, hey, you're going to need about $10,000. Again, he's going to need a little less than that, but we're setting him up for success. So she needs 65, and he needs 10. So there's $75,000 there that we need between all parties to make this thing happen. So I explained to them that as long as this house will appraise for at least $75,000, we can make it work. And I gave them the $75,000 example. I said, hey, if you agree to sell this home for $75,000, our borrower, of that $75,000, you are saying that you are going to give a gift. The seller is gifting that borrower, her family member, $10,000 in equity. She's basically telling him, here's $10,000 in equity. Do whatever you want with it for this transaction.
Which he is going to take that 10 down payment, closing cost, everything it's going to need.
He's going to apply it
to get it in his name. Yep.
Every dollar he needs to make that work is going to be in that $10,000. He's going to apply it. So it sold for $75,000. She gave away $10,000 to him. So there's $65,000 left. She's going to pay her $2,000 in closing costs. There's $63,000 left. She's going to pay off the lien for $13,000. Now there's $50,000 left. She walks with a check for $50,000. So we took a situation in which a borrower did not have money. If any other home popped up that wasn't for sale by his niece without this equity,
can't do it.
He's not going to be able to buy because he simply doesn't have any funds to pay his closing costs. We took that bad situation from someone who was afraid that they wouldn't be able to keep this home in the family, and through the gift of equity, we are able to satisfy the seller, get her everything she needs, get the buyer all the money he needs, and he's starting in his home in a conventional loan where he put 5% down from the equity of that home, and now he's in. And now next year when these rates do drop, like we talked about, he'll be able to take advantage of a refi and probably drop his payment even more.
Yeah, without, again, putting any money.
Without doing anything. Yep, he owns a house, and don't get me wrong, he did put $10,000 into it, right? But he really truly showed up with nothing.
Yeah, and is able to take advantage of that. And we've seen people in the past use this to use that equity for their down payment, for their closing costs, but you can use it for additional items as well. You can use it to pay off debt, because we've had clients where, hey, their debt to income doesn't work. In order for this to work, they also need to pay down that student loan they have or pay it completely off. Like I've had people use this, pay off all their student loan debt or credit card debt.
We had
or
someone
whatever
pay
it
off
may
a
be.
jet ski so they could qualify.
That's true. That's true. Jet ski paid in full
By the gift of equity.
by the gift of equity. Yes.
Whereas otherwise, like we just said, same as this other person, if that jet ski just stayed on there in this case, or whatever debt it may have been, they're not buying a home.
Yeah.
But because there was enough equity to pay that off, we got it out of there, their debt to income ratio worked, and everything was good to go.
And this takes this whole podcast full circle right there, which a lot of it has been talking about using the equity of the home. So it's just another gift of equity. You know, it's a family-to-family transaction, but it's another way to use that equity that's in the home that benefits you, the seller, whoever it might be, and all the parties involved.
Yeah, and back to what Max said, using your equity. Let's be smart. Let's not cash out our home equities and. I mean, I don't know. Maybe you do cash out your home equity and go to Disney, but let's not cash out our home equity. Let's not cash out our home equity.
I know a listener that'll want to do that.
Let's not cash out our home equity and take $100,000 out and go blow it, right? Because that's not putting it to good use. But if you're not using your equity, if it's just sitting there in your home, it is kind of dead money.
If you
right?
got all that equity, why would you want to give a credit card company 22% every single month? Like, forget them. Use the equity in your home. That's essentially a retirement savings account, whatever it is for you. Use that money, pay that off. Stop giving them your money.
It's a savings account. I mean, I think of
exactly.
I think of my home equity as a savings account, and I treat it like a savings account. I'm not going to use my home equity. I'm not going to go blow my savings account, right? I'm not going to go use my home equity on something irresponsible. But if there's something I can do to better, myself, my family's financial situation using that home equity, yeah, we're going to use it. Otherwise, it's dead money.
Yeah. And again, so we're not going to point any of our clients in the wrong direction. We want to make sure that we're putting our clients in the best financial position they can be in. We want to be your mortgage guys for life, not just for one transaction. We're not trying to screw anybody and put them in a bad spot and force feeding something down their throat. If it doesn't make sense, we will tell.
I tell people all the time, I wouldn't do this.
I tell them all the time, like, I think we need to wait. We need to wait. So, like, we could do it, but I think it'd be better off down the road.
And sometimes I'll tell people, hey, I wouldn't do this, but I understand why you might if X, Y, and Z is really the case for you. And as long as they understand what we're getting into, that's fine. But yeah, we're never going to force feed you or sell you something so that we get to write a loan. The rates will eventually come down. They'll also eventually go back up, right? But when the right time is right, that's when we're going to do it.
Yeah. So again, equity, we're using that equity that we have. Refi 90, cash out opportunities to take 90% of your home value and use that. Normally that's 80. We have it's exclusive here. If you call somewhere else, they're not going to have this. You have to call us in order to get this Refi 90 opportunity for cash outs. Market update, rates have went up. Hoping those things move back down before the end of the year, but hopefully by the end of the year, but more likely into 2025.
Don't listen to the news on that either. Call us if you want to know what the rates are, what's actually happening. Yeah.
Any questions about anything that we went over, give us a call here in the office, call one of our many loan officers that we have. And for Mac and Chris, we will see you guys next time.